Yes, also streaming live on yorbamedia.com. Now, my next guest is Nick Santiago. He is the president and CEO of In the Money Stocks. Nick started in the industry in 1991, and he managed money for a large, affluent private client group. Now, he's an expert in technical analysis, and he has a really, really good grasp on the Dow theory, I should say cyclical analysis theory. Now, in 2007, that's when he put In the Money Stocks on the map. So, Nick, thanks for joining us today.
Thank you, Michael, for having me.
My pleasure. Well, everybody wants to talk about the S&P 500. I want to give you a chance to talk about it, but we've got a lot of different things to cover. So let's start with what kind of a year do you think we're going to have for the S&P 500?
Overall, it's going to be a bearish year. We're probably a little bit oversold now after this 500-point collapse that we had today, but again, this is going to be a bearish year. If you just go back 10 years and you look at the cycle that was in place back in 2001, we're also coming into the 9/11 anniversary, which was a bearish time for the market. I'm not saying that we're going to repeat a terrorist attack or anything like that, but I am saying that the market is going to face turbulence just looking at that cycle.
Now, here's a question. Here's a question I've got for you.
Year.
I got it with the bearish year. Do you think we're due for a bounce right now because such a hard move today?
This is going to be a little bit tricky. We're a little bit oversold. I think any short-term bounce can be sold again in this market right now due to this breakdown. If you look at the charts, everybody's talking about it. That's the one thing I don't like is that there is a head and shoulder top in place, which gives us a trigger down to around the 1145 level on the S&P 500. That'll also be a significant 618 support level from the July 1st low of 2010.
Let me stop you right there so everybody, because people aren't quite as up to speed on technical analysis. Not everybody is.
That's okay.
The 618 is 6.618% of the move, or 61.8% of the move. It's a Fibonacci measurement, and you can learn more about that at next webinar. We'll get into that next. But that's where you're looking to go ahead and initiate either puts, short.
Well, around that level, I'm going to be very attracted to be a buyer there. I think we'll get a pretty significant bounce around that 1145 level if we can get down there. That should be a real good level. It's also the 200-day moving average on the weekly chart, which hasn't been tagged since really last October. So that should be significant. I think that's probably where we're headed. So any rally we get or any short-term bounce now, I think is going to be a selling opportunity in the near term.
That's what I'm talking about. Okay. Let's move on to the dollar collapse. Now, are you in the camp of the dollar will collapse like everyone else?
Well, not right now. I think the dollar this year is going to rally, and we're going to have probably a commodity collapse. I think copper, iron, everything with the exception. I even think gold and silver could go down as well, although those are wild cards. But I do think every commodity is going to be under pressure, including oil, the second half of 2011. The dollar should strengthen. But ultimately, the Federal Reserve probably comes in next year, does a QE3. Maybe they won't call it that, but they'll do another quantitative easing type deal, and that will ultimately bring the dollar back down. But the dollar's demise is in the long-term picture.
Technically speaking, I can see on a weekly chart you got 3 higher lows on this thing. Looks like it could be building a base, and people generally like to move into the dollar when everything else is falling.
Yeah, absolutely. It's a safe haven until it isn't. And if you look at the past 10 years using the U.S. dollar index, you'll notice that the Fed has been playing yo-yo with the dollar. So they have to let the dollar strengthen at some point, just because gold and silver are the Federal Reserve's worst nightmare. You know, they're in a business of printing money in the fiat currency system. The dollar, gold and silver are telling us that there's inflation and there's too much money in the supply system. So eventually the Fed has to clean it out and let the dollar strengthen. And I think that's what's in the process of happening the second half of this year.
Okay. Now, you had some accuracy there in 2007. You predicted the 2007 top. How'd you do that?
Well, I use cycles. I'm very proficient in cycles, and what I did was I just went back 100 years, and in 1907 we had one of the biggest stock market crashes of all time. In fact, Jesse Livermore made probably over $30 million at that time. So anytime you have a significant date in the past, you can look into the future, and you could see what's probably going to happen. Also, we had the 2000 top, and then we bottomed out in 2002, October, and the market started to rally in March 2003, really all the way up to 2007. That happened to be a 60-month cycle there from low in October to high in October. And what I did was, to get the price, I went back and I looked at where the breakout took place. And if you just look at a chart of the S&P 500 and you go back to March 2003, you'll notice the low there was 788 on the S&P 500. And if you simply just double that, you'll see 1576 is what you would get. And if you look at the October 2007 top, you'll see that 1576 was the dead-on high, 1576.09. So that was how I figured out the price. But using that 100-year cycle and then looking at the 60-month cycle in shorter term, I realized that that would probably be the high. So I had all my subscribers getting ready for the high of the market and the bear market to begin on that date. And how I got the date specifically was I knew it was a banking crisis and a credit crisis. And if you go back in history, and if you go back to 1307, you're going to find out that the Knights Templar was persecuted by the French king. And what happened back then, the Knights Templar really were the first international banking system, and that created an international banking crisis back then. And history has a way of repeating itself, as the old saying goes, there's nothing new under the sun.
Now, that's the first time I've heard that, bringing the Knights Templar in on that. But, hey, whatever works.
That's it. Whatever works.
Whatever works. Okay, let's move on to gold. I wanted to hear what you're thinking about the gold market. Everybody says it's going to 2,000, and some people really get crazy and it's going to 6,000. What's your thoughts?
Well, I'm in the camp, I'm a gold bug, but I'm in the camp that gold is going to go a lot higher, but however, not in the year of 2011. I believe that we are going to come into a correction the second half of this year, probably into 2012. I'm uncertain right now what month it's going to be in 2012, but I think you're going to get another lifetime buying opportunity for gold in 2012.
Okay, so what's happened over here the last couple of days in gold? Are you seeing this as a current possible top, short term? Okay.
I am seeing it that way. I've been telling my subscribers that I don't like the way that gold's been making new highs on such low volume. And today, it looks like gold could have spun out of control. Even the SLV today traded, I believe, 40 million shares, and it was a pretty solid reversal day. Now, the European crisis could keep it going for a little bit. I just don't see much more upside in gold at the moment, and I love gold long term.
Okay, you talked about a buying opportunity. Give me a number.
I'm thinking 150 on the GLD, maybe short term, and then possibly around 140 ultimately.
Okay, how about the futures number per ounce?
Let me just pull up my
futures chart you got support here at 1480 back in July 1. Do you think it's going to go deeper than that?
I'll tell you exactly right now. I'm thinking 1530 short term, and then ultimately we're looking at around 1375.
Okay, you're looking at the January lows in that area. Got it.
Yep, 1370. That was the breakout point, basically. Yeah, that was the breakout point. So 1375, 1350, right in that area.
January, March.
Be weekly 50 moving average just below it as well.
All right, that's a good place to buy gold on the pullback. All right, that sounds good. Let's move forward briefly to stock picks, but I don't want to miss out on the European crisis topic.
Okay. You want stock picks now?
Yeah, you got a couple of them?
Well, right now, after we move out of this correction, I think you want to buy NASDAQ 100 stocks. You probably go right back to what has been working, which is the Apples and the Googles of the world. I mean, that's probably, and I like these cloud computing stocks, NetSuite. I like the Citrix Systems, Salesforce. Those are the sectors that get me a little bit excited. Rack Systems, stocks like that. But you got to wait till after this correction is done.
Oh yeah, that goes without saying. Okay, we got about a minute and a half left. Let's touch on the European crisis.
Okay, this is going to linger on. This will go deeply into 2012. The euro is done. I believe the European Union is over as we know it. Greece will be the first country probably to go back to the drachma or whatever currency they want to call themselves, and then you're just going to see it one by one. There's no way that Germany can single-handedly support this, and there's only so much money that can be printed with the ECB or the Federal Reserve.
So you're shorting the euro?
Well, I wouldn't short it just yet, but I mean, right now is not a bad time to short the euro. I haven't done it yet because you're still in a pretty good consolidation here. If you look at a weekly chart, I mean, it has dropped pretty good, but you got to get through that 130. I'm going to say 139, level, right around that area.
Okay.
And then you see how it reacts there. But I wouldn't short the euro just yet.
Okay, well, that's good. Now, you've got a social network page on our website so that you can go in and have expanded conversations with people, and they can access you there. But also, you've got a webinar coming up where people can go to and get a real good conversation going on with you about the particulars. When is that?
Well, our next webinar, a teaching webinar, where I'll teach everybody how we predict cycle dates and things of that matter, is going to be on August 20th coming up in about 2 more weeks. If you're a regular subscriber, we hold webinars once or twice a week for about an hour or so, where we take questions from members constantly. So that's another thing that subscribers, participants may want to join.
Okay, so everybody out there, we're about to close, but just click on the contact button on our webpage, and we'll be sure and send over the information to Nick so that you can join his webinar and get your questions answered. Nick, thanks so much for coming on the show. I appreciate it.
Thank you for having me, Michael. Have a great day.
You too. That was Nick Santiago, President and CEO of In the Money Stocks. When we come back, John Shealy, Director of Research and Development at Your Trading Room. We're going to talk